What is going on, everybody? This is Ben Killer, aka Spy Hates Me, with Eastside Options Trading. What I want to go over real quickly is swing trading, the wins and when not to do it. So we're seeing a lot of talk that people are staying away from swing trading for good reasons, but we're not seeing a lot of explanations as to why people are staying away from swing trading. I know a lot of the new traders are kind of confused. Most of the year it has been a feasible year for us to be able to swing trade. You could buy in an area of lower certainty that pushes up to an area of certainty, right? So we're not seeing that anymore, right? Why? Well, we have underlying issues that the nation, the stock market has to go through before it can really start to push higher, right? I'm not going to get into much of the Fed talk as to why this is going on. I'm sure a lot of people have heard the news or have heard other people speak on it. There's multiple underlying issues that are really causing uncertainty in the market. When we get that uncertainty, that's when you really pull your foot off the gas, and you don't put so much capital into swings, right? That's really not the time that you can be like, oh, okay, I'm gonna buy, monthlies and on this small break right here, and it should play out, right? Well, yeah, earlier this year that was a plan of action that would a lot of times work out, but you have to. For me personally, I base 99% of my trades that I take off of the major ETFs. I have two major ones. Most other people as well, SPY and Qs. Especially tech would be Qs, and SPY, pretty much the broader market, right? So what we're seeing, everybody has been seeing with the SPY, right, is that rejection of the 470. So that gives us, that rejection of 470 is obviously a big supply zone that the market has just been unable to really push through confidently, right? Today, 12/10 of December 10th was actually the first day that we got a close over 470. That's a small signal. I'm not really taking that as a huge buy signal right now. There's underlying issues that are going to be talked about very soon within the stock market that can really keep that going, or that can reverse that. So I always stay on my toes when it comes to the fundamentals of the broader stock market. But just speaking on price action, right? So we've seen that rejection of 470. 1, 2, 3, 4, 5, 6, 7, 8, almost 9 times it rejected 470, right? Today was, like I said, the first day that we got that close. When we're rejecting a key level like that, you're going to see not the best price action. And what I mean by not the best price action is it's a very choppy environment where it makes it very, very unpredictable on how you think the next day or that week is actually going to pan out. So that makes it very hard to be able to swing trade, because you need to be able to at least somewhat be able to predict that trend is going to stay in your favor when you buy that position, right? So this is the area that most experienced traders have let off swings and have switched to day trading, because this area right here is so hard to be able to predict. I just kind of wanted to give that brief explanation on why a lot of people are not swing trading. What I'm going to be looking for is the next topic. So I'm going to be looking for the broader market to actually, well, first of all, I'm going to be listening to the fundamentals. Secondly, I'm really going to be watching for the broader market to break that supply zone, right? So we want to see us confidently break that supply zone and actually start putting in those higher lows and turn that supply zone into an area of support, right? So we want to turn that resistance into support, and if we can do that, then we can actually go back on a solid uptrend, right? Once we start putting in those higher lows and we start moving up, you'll see other names do the same thing. I know a lot of people have a lot of growth stock names in their portfolios, most of which are not doing very good, especially this last quarter. Especially this last quarter. This last earnings reports have really put a damper on the price action of growth names. It's It's a big switch from what we saw at the beginning of the year to what we're seeing now. We're seeing a lot of them that are really, really beaten down. And big question is this the time I should buy it? My answer is always going to be no, because I don't catch knives. I would much rather get it at a more expensive price when it's on confirmed an uptrend. So PayPal, for example, is a very, very popular one that has seen significant downside, especially within the last few months. And I get this question all the time. I got this question here. I got this question here. I got this question here. And I've been getting this question here. Is this a good time to buy? My answer here was no. My answer here, no. 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 Why is that? Because that knife is still going. Even before all this was formed, you can confidently say that knife had not stopped. What to look for is you want to see price base, right? You want to see it build a foundation. You want to see that area of accumulation really build up. I'm highlighting this area because price is looking like it's trying to base here. Do I think this is the time to buy? No. I like to see price base and actually move out and reclaim these lower movement averages, because these are nothing more than areas of resistance when they're under, right? So you really want to see price maintain these movement averages and start putting in those higher lows and actually break this downtrend and start moving higher. You can get it for a good price here if it's actually the bottom, but do you know if it's the bottom? No. Price has to, it has to prove itself to you before it actually reverses out. So you want to see a stock put in those higher lows and actually start on an uptrend. So once this stock actually, say hypothetically this is the bottom, right? Once you see it start to go up, right, it's not just going to go parabolic straight up right back to where, it's high of this year, right? It's not just going to cruise all the way back up here, right? We're going to see it go on an uptrend. There's going to be areas of consolidation, small pullbacks that you'll be able to get an entry later on. And that's the areas that I really look for. I look for that confirmed uptrend, and then you just wait for an area of consolidation, and that gives you a solid entry on an already confirmed uptrend. How do you know it's a confirmed uptrend? Like I said, once it starts moving over these moving averages, and you'll really see it start once it pushes, hypothetically, if it pushes over the 21 now and it holds that, you'll see it catch resistance at the 50, right? Most likely. And then you'll see probably it flag there or consolidate around the 50, and then maybe it moves up over the 50. And you can bank on that 50 being a decent area of support for it to base on as well. So it takes those stair steps up, and that's how price moves. It's not just, you're not going to miss the move, I promise. When price starts to move back up, it's not going to do it all in one day. There's going to be ample amount of opportunities for price to give you an entry, right? So when it comes to swing trading, if you find a very good candidate, that doesn't mean you have to enter it that day, right? If it's parabolic, straight up, huge green candle, that's not the day, in my opinion, that's not the day to enter the swing trade. A lot of times that price is going to retrace. AMD, big example. I'm going to get rid of this. We're going to go in hindsight, right? So, we're going to go back a little bit. AMD is, it loves these type of formations. when price broke out here, like I said, it went up, right? Price went up. This is that third day of that green candle. This is when people are like, oh man, this thing is just going to go up forever. That fourth day, and people are like, okay, I'm going to go, and this obviously isn't going to stop. I'm going to start my swing here. They're going to catch that next day, and they may be about 2 months out. They're like, oh yeah, this is going to go good. I'm not going to let it go yet. And then you get that area of consolidation. Now this is when I become interested. It had market backing at this point, and it was obviously very strong. So you let price do its thing, right? Then it formed this triangle here. Price got tighter and tighter and tighter, tighter. It's putting in slightly lower lows, slightly lower highs, and then price did finally, it came out of here, and it's like, this is more of a buy signal to me than this is. When it breaks out and it's consolidating over formation, over, a main moving average, like the 50, for example, is one of the main ones, or even the 100 is one of my other favorites. But the 50 moving average is the main area of support, right? So you saw it drop below that 50, and it did reclaim it and put that small area of consolidation. This is when you can really start eyeing it, like, oh, okay, price is getting very tight, it's holding the 50, it looks like it's it's ready to go. Even if you missed it then, price has proved itself. It has started back on that uptrend, right? So even the next one right here, price has proved itself then. It broke out there, that's when you can be interested once again. But you don't have to be interested all the way up here when this day right here, like, oh man, AMD did a 9% day, let me enter a swing here. Well, guess what it did the very next 2 days? Retraced that whole 9% day before actually moving forward once again. So the biggest thing about swing trading, to me, is to knowing when to enter. Entries are everything. Sometimes you enter a little bit too early. That's okay, as long as price has not reversed against you. Maybe if you bought a monthly, that's 2 months out, you could be 10 or 15% down 2 days later. But if it's just a healthy consolidation, give it a little bit of time to work out, right? But you just got to know when. And I can't make a video to give you an exact price of when to enter a swing, or you can't teach somebody what price action to look for. You can give them tips, you can give them tricks, but price action is something that you really have to watch yourself, and you really have to be comfortable being able to tell, like, hey, this is healthy price action. It's consolidating above this area. Hey, I'm down 10 or 15% on this trade, but this is still a healthy consolidation. Price definitely looks like it wants to move. It has this uptrend behind it. Maybe you entered the second day here, and you're like, oh man, 2 red days in a row. I don't know about this. To me, that's nothing alarming. Price does that. When to be alarmed is if you enter somewhere like this, and then you see your whole move that you entered on get retraced within 1 or 2 days. That's, to me, is when you should be alarmed. First of all, you should have never entered in this area. You should have waited, right? After you get a huge parabolic move, there's exceptions to every move, right? Apple, for exception, Apple likes to just continue to go higher. I guess Amazon sometimes likes to just push higher, and it's okay to miss a move sometimes, right? You don't have to catch them all. But just knowing when to enter, I think, is probably the most important part. And that when to enter is, like I said, it's not just the price action of the individual asset, right? It's the price action of the broader market as a whole. And that's kind of what I really, really wanted to stress in this video, right? Let me get rid of this stuff. When you see this in the broader market ETFs, This is not confident price action. This is not when you should be trying to time bottoms. This is not when you should be buying because you think that knife is going to land, right? This is when you should be defensive on your swing capital. You can be aggressive day trading. Intraday trades have been very profitable lately because we get a huge move to the upside, and then the very next day, you can play it short. You can get a huge move to the downside. That's a whole different video. I'm talking about swings. So protecting capital is very important. Swing trading in this environment, I'm sure a lot of experienced, even new traders, have learned that trying to trade swing through this is near impossible. There's exceptions to every rule. Costco, you could have literally bought any time since October, and you'd be up until it consolidated here, and then you'd be up today. But yeah, that's mainly what I wanted to touch on is really wait for price to start building those higher lows and then catch the uptrend. Catching knives, in my opinion, is really just a recipe for disaster. Just because we're seeing, a lot of these names really get beaten down doesn't mean they're just going to land because you think they're going to land there. Yeah, you can watch for demand zones, which is very, very important. You can really watch for those demand zones, and you can wait for price to really settle out in those demand zones. And then that'll be your first key, like, okay, price is basing in this area. But still, you wait for price to base. You wait for the funds, the institutions to really load up and accumulate those shares. And eventually it will be reversed. It's the cycle of the market. Everything gets beaten down. How far? Nobody can give you an exact penny. If they say they can, then they happen to be right. It's luck. Nobody can give you an exact penny of where the knife is going to land, right? So just wait for that price to actually come back up, and you'll be good. Just wait for those entries, until those higher lows start actually being put in, and it actually can reclaim the 8, reclaim the 21, and turn those into support and actually start to move back up. You shouldn't be interested in the long side. Short side, baby. If you like swinging short, then yeah, things like SC, PayPal, Square, Peloton, Docs, they'd all be good if you started swinging from the short side. But that's not my forte. I swing puts occasionally, but more of a day trader when it comes to puts, right? So that's really what I wanted to touch on. That's pretty much the entire video. I really just wanted to touch on as to why people, because we're seeing it a lot. We're seeing a lot of people say, I can't swing trade right now. I'm not swing trading right now. I say it a lot. I preach it a lot. I don't think this is the time to be swing trading. And I really wanted to touch on as to why that is. And I kind of wanted to give insight of what to look for when that next opportunity actually comes around, right? Because it will. It's a cycle of the market. You can go back. If you're kind of stressed out right now, just go to the broader market, and go to the weekly or the monthly. We get these drawdowns all the time. It's just a cycle of the market, and it's going to continue to happen to the lifetime of the market. Are they all going to be like the COVID correction? No. But we are going to see red candles in every green uptrend, right? So that's just something to remember when you're considering taking a swing. Always look at the broader market, see what the price is doing there. If price in the broader market is not like it is here, it's more so what we're seeing now, or it's this, then that's not the time to start swinging long. For me personally, I can't speak for everybody, but I just think that having a confirmed uptrend is much puts much higher conviction in the trade than wondering if the market is going to have a 2% red day overnight or something. So first things first, listen to the market fundamentals. Listen to what the Feds say. You don't have to be a politician. You don't have to take a side, but you can listen to the financials. Listen to the meetings. Second thing, if you like the stock, listen to the earnings reports. If you don't know what those numbers mean, Google it. There's a plethora of write-ups and videos of how to read earnings reports. Thirdly, watch price action of the broad market. I think that is one of the most important things. The price action of the broader market can give you an idea of what the fundamentals of the broader market is actually doing. If we're seeing solid price action going up, that means whatever they're saying is working. So ride that trend. So just keep those two things in check, and I think if you just remember to watch those things, really listen to those things, then you can be a successful swing trader. Just being able to time it correctly is the most important part. Anyhow, thanks for listening to me rant about why I think swing trading is very important, but just not important at this moment. Thank you all. I hope you enjoyed the video, and I will see you all next time.